Welcome to Trading Nation. I am Brian Sullivan. Boris Schlossberg and Wald are your guests today of BK Asset Management and Oppenheimer & Co. respectively. Boris, not maybe the beginning to the year for the broader stock market that many had thought. Some are calling the Trump bump now the Trump slump, but earnings haven't exactly shined either. I mean, you could ask Under Armour, UPS, Pfizer and some others. What's your take on why stocks have come down a couple days in a row?
Listen, there's a lot of macro warning signs going backwards. The GDP numbers missed last Friday. The data on spending and consumer sentiment has not been as good as everybody thinks it has been. I think there is here potential for a roll-off in equity prices, simply because, as you said, earnings have not been as good, and the economy going forward could actually be topping out. So we really need a further boost from the Trump administration. The Trump administration has been kind of sidetracked with all sorts of political issues, not really focusing on the economic issues. That's making investors nervous. That's why you're seeing the sell-off.
Okay, all right, Wald, do you agree with that thesis, and where are we headed?
Well, from talking to clients this week, from discussions, our feel is that a lot of investors are looking at this market from a very myopic lens here. And I don't think that's the right thing to do, because what it's causing is this 1% pullback from an all-time high. It's turning into these fears that this is going to be the start of the next major drawdown in the equity markets. And we just don't see the signs of that major market top looking at our cyclical indicators. Specifically, the internal breadth of the market remains very broadly based. Credit conditions remain very firm. And we're really not seeing those deflationary concerns in the bond market either, like we saw in recent years. So our take is that you want to remain positioned in these markets, and these pullbacks are the tactical opportunities that you want to buy. Now, I think it's terribly difficult to time the pullbacks. I recommend against doing that. I think you want to stay invested. When you get them, you do want to buy them. Speaking in terms of the S&P 500, hasn't even broken its 50-day moving average. We see a lot of support right there at around 2250. You get that pullback, we think you buy it, Brian.
Okay, get the pullback we think you buy. Boris, you want to comment on that?
Yeah, I was going to say, I'm going to take the opposite side of that trade until we see the fresh breakout, because it could very well be that Dow 20,000 was a near-term top, and it will only become obvious in retrospect. So I'd rather be cautious right now and let them prove me wrong. Let the Dow go back to 20,000, then I'll be a buyer. Until that point, I'd rather stand on the sideline.
Or you guys can buy and sell to each other, perhaps. We need the seller and the buyer,
Done.
both sides of the trade. And that's why we do it like this. Boris and Ari, very humane discussion we had as well. Disagreement. We need more of that in America. Thank you, guys. Folks, thank you for watching Trading Nation. Check out the live version during Power Lunch on CNBC. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.